Hello everyone, my name's Jeremy. Today is Thursday, May 18th, 2017, and there's a lot to talk about in the cryptocurrency scene. Ripple, Tuesday, made a new all-time high. It's been on a tear and it looks like it's going straight up. As of today, it has pulled back a little bit, but so far it's looking pretty strong for Ripple, and we'll discuss maybe a little bit if you should be investing in that at this point in time. Bitcoin, as of this moment, it's about 1 o'clock p.m. Eastern Standard Time, and it looks like Bitcoin is heading up to $1,900, approaching gold's all-time record high. Is it going to be able to achieve it sometime in the next couple of weeks? Good possibility. And there's more to come on this edition of Block and Key. Stay tuned.
Block and Key.
So this article is from May 16th. You can find it on CoinDesk, talking about Ripple. Ripple pledges to lock up $14 billion in cryptocurrency. So for those of you that have been paying attention, Ripple went on a tear this week, and it just exploded. I believe its high on Tuesday was about 42 cents US, and beginning of this month it was at a mere 8 or 9 cents, I believe. So it's just exploded higher. I'm not suggesting that viewers go in and rush out to buy this cryptocurrency at this time, especially if you're new to cryptocurrencies. I highly recommend sticking to something like Bitcoin just till you get your feet wet. So the article goes on to talk about Ripple and the corporation behind it, and just says down here, to give potential future Ripple owners certainty that the market won't be flooded with this trove of cryptocurrency, Ripple built 55 smart contracts using its own escrow feature, released for public use in March, each holding 1 billion Ripple and expiring on the first day of every month for a period of 54 months. As each contract expires, the cryptocurrency will briefly become available for Ripple to use as it sees fit. So that's interesting. Here's a company that is using this cryptocurrency, and they can seem to somehow game it. There's smart contracts. They're holding things in escrow. Now, Bitcoin has some of these features as well, but no one really controls Bitcoin to this extent. Down further in the article, it says, more than speculation. Collectively, the total number of Ripple in existence is worth about the same as the entire Bitcoin market cap. Excuse me? Read that again. Collectively, the total number of Ripple in existence is worth about the same as the entire Bitcoin market cap, elevating the stakes far beyond just cryptocurrency speculation in its own right. Well, that's a stellar statement. Like, I'm not suggesting at all anyone get involved with this Ripple at this time until it stabilizes. I'm not a big fan of banks and governments, so I know this is the banker's coin, but if they can pump it up, they can also pump it back down. Make no mistake. But again, the banks aren't going to really be too involved with Bitcoin, I don't suspect, because banks like to be able to manipulate and rig things and wield everything to their advantage. And they'll come up with all kinds of products and ways to manipulate it. The banks don't like to lose money, not if they can avoid it. So let's go over to coin market cap. Here's the cryptocurrency market capitalizations. Right now, as you can see, Bitcoin is approaching $1,900. It's up there now, almost with the price of gold. Gold's all-time high. So well, that'll be interesting to see how that works out. Ripple, getting back to Ripple while we're on that top. Look at this. This is insane. If that's not bubble, I don't know what is. This is the all-time chart. This goes back, it looks like late summer 2013, and it just, boom, just skyrockets. Let's go to the 1 month chart. So you can see here back in the beginning of this month, it was trading, wow, look at that, 5 cents. Back on May 2nd. And then right around May 6th, you can see the volume too, it just started to take off. And then Tuesday, boom, up to almost 43 cents US. That's pretty wild. And it is just crazy. Earlier this week, Mike Maloney released one of his latest videos titled The Everything Bubble, Stocks, Real Estate, and Bond Implosion. For those of you that haven't followed Mike Maloney, I highly suggest you check him out on YouTube. He's done some fantastic work showing chart analysis on bubbles, stocks, bonds, gold. So we're going to touch upon this, and I'm also going to... Vays also released a video on Monday. I think it was a stream. So I want to discuss two of these people come from two different perspectives. Mike Maloney believes gold's going to go higher. It may pull back a little bit, but then go higher once the dollar begins to implode and the stock market comes down. Vays doesn't have a great outlook for gold going forward. He believes it's actually going to go down. It's not going to really recover much until into the 2020s. So I'm just going to go over a few of these clips and go through their analysis, and then maybe give a few of my points too. They're both right, but it's interesting because they both have different perspectives and outlooks on how to do it. So I'm going to try to break it down for you. So here's the video. It starts off at about 13 minutes, and this is about the real estate bubble that's coming. So I'm just going to play this little clip for you, and we'll get Mike's view and analysis on what he predicts is coming.
Next bubble in our everything bubble is the real estate bubble. Now, in 2008 and 9, real estate crashed in the United States and Great Britain, but in Canada, Australia, New Zealand, and China, the real estate bubble just took a breath and kept on running. This is an article from Maclean's. It's a Canadian publication, and they're saying that the Canadian housing bubble looks disturbingly familiar. And this is another article that says Home Capital, they're the biggest mortgage lender in Canada. Their stock plunged after the mortgage lender seeks a $2 billion credit line, and that credit line is basically a bailout from the Bank of Canada, Canada's central bank. So the bailouts are already, this is a credit line that they're going to be guaranteed, but what's going to happen is the crash will start and this will turn into a bailout because it's going to be much bigger than just this $2 billion. What is happening is there's a run on home capital right now. $600 million worth of deposits have been withdrawn recently, making them unstable, and their books are not that sound. So here's some of the Canadian real estate evidence. This is the price of homes compared to the income of the buyer. So this is the affordability index. And you can see the peak in 2007 for the United States and then the crash. And in Canada, it just took a little breath and then kept on running. And the peak is way above where we were in the United States and Great Britain back in 2007. So this is going to be something bad. This is the home index of home prices. So the last one was the affordability, and Canadians are being crushed right now. They really can't afford their homes if they're buying new ones. I'm
just going to pause it there. He makes some great points because I'm going to go to this chart. So this is the house prices to incomes ratio in Canada. I live in southwestern Ontario. I'm only about an hour and a half from Toronto. And as you can see, right around the 2007-2008 bubble, the U.S. housing market kind of rolled over. Canada's just took a hiccup and kept on going. It's pretty wild. I believe now it's over 160% leverage. The average Canadian is the home. Like Toronto is just insane. Even Kitchener, Waterloo, Cambridge area is exploding in value, and people are willing to commute 2 hours to work one way each day just because of these outrageous housing prices. So I'm just going to pause it there, and we're going to go to the next clip. Now in this clip, Mike discusses PE ratios in the S&P 500. This is kind of important to address because when I get into the video of the stream from Vays earlier this week on Monday, he kind of shows a little about this and how stocks are the best place to be and how you would have lost terribly if you would have stayed in gold. Again, he's correct, but his perspective is different, and this should demonstrate why.
Start the everything bubble with the stock market portion of the bubble. I'm going to present a few charts here, but they're fairly easy to understand, so stick with me. This is data compiled by Dr. Robert Shiller of Yale University, and he's gone all the way back to the 1880s and compiled what's called the price-earnings ratio. He's recreated the S&P 500 by putting together the 500 largest companies in the United States at the time, going all the way back into the 1880s. And the price of a stock versus how much the company is earning is a very good measure of whether a stock is overvalued or undervalued. And if it's priced down at 4 or 5 or 6 times earnings or 10 times earnings, it's a bargain. If it's priced above 15, it's too expensive. If it's priced above 20, it's in a bubble. And what you see here is that right now we're at a PE ratio. The price is 29.19 times the earnings of the company per share. And the only times that it's ever been in a bubble this big was a few weeks at the end of 1929 before the stock market crash, and a couple of years, 1999-2000, when the NASDAQ crashed. And so this is saying it's in a hyper bubble. It's even far higher right now than it was in 2007 when the stock market crashed, and that was the global financial crisis. So it's in a bigger bubble than it was back in the 2007 peak.
So to understand the price to earnings ratio, for those that maybe aren't aware of what it means. For example, suppose a company is currently trading $43 a share and its earnings over the last 12 months were $1.95 per share. The PE ratio for the stock could then be calculated at 43 or 22.05. So when we look at this chart, we can clearly see that right now we're in a bubble. It hasn't been this high since 2000 and 1929. Now everything always corrects, and so if you time yourself correctly, if you are in the stock market, if you are a trader, now might be the time to look at other assets, and that's why gold and silver are probably in a great time because they're extremely undervalued. So in this clip, Mike's going to talk about cryptocurrencies and why it's actually considered an asset. And even he has some years ago, and I can understand his position. He's trying to run a gold and silver business, a precious metal firm. And he seemed a little skeptical at first, but now even he is a believer in cryptocurrencies, especially in Bitcoin. So I just want to play this here for you so you can hear for yourself.
So the answer and how to get prepared for this situation of this roller coaster crash and the potential of a new world monetary system is a little bit more complex than the answers last time. It's not just gold and silver. You want to have an alternative monetary system already ready to go. And those actually exist today. They're called cryptocurrencies. It started with Bitcoin. There have been several others that have been introduced, and I own a few of them. I don't own a lot of cryptocurrency, but I think it's something that's necessary to be prepared, because if the monetary system failed, you would be able to do transactions right away with other people, and you can do them over long distances. You can do them over the internet, just like you pay with a credit card today. And so, you know, when I used to tour with Robert Kiyosaki, he would always talk about in a real crisis.
So that's an interesting perspective from Gold and Silver Bug that has finally come onto the cryptocurrency bandwagon. And I'm just going to get back to some of these charts now, which wasn't in the presentation. So this is the M1 money supply in the United States. So you can see one of the reasons why precious metals have done so well, as well as stocks, is because at this point right about here, in 1971, the US went off the gold standard. And as you can see, things started to creep up pretty quickly. Once the 2007-2008 crisis hit, it was off to the races. This is just insane. This is just pure money printing. It's an artificial stimulation, and it probably won't last. It'll end in tears. And so when we get to the next clip with the screencast that was done by Vays, I'm going to break it down for you, and then how you can compare and make the best decision for yourself to how you should invest. Again, I wouldn't be investing totally in cryptocurrencies. Stocks looking dangerous right now, especially with just what happened this week. I'm not saying you can't make money at these things, but you have to be very cautious in this time. So here's the podcast from Vays this past Monday. It's number 57. He's about to discuss gold. I believe one of the questions coming up is a call-in for gold and if they should invest in gold or should they have held on to gold. So I'm going to let Tone give his view, and then I'm going to break it down and give some analysis just after this.
Is there a reward for holding Oh yeah, I already did that. Could it be fair to say that your view on gold and S&P? What's S&P? Oh, Snap? No, that's SNAP. Anyway, I don't know. That your view on gold apply for short to medium term trade where so-called gold bugs are more correct on the long term, perhaps spanning a decade or more. No, absolutely not. Here. Gold. Gold historical. Since for the last 100 years, gold has been one of the worst long-term investments. It's a good, if you want to hold on to your wealth, sure, but as an investment, I wish this chart went back to the Great Depression, but unfortunately it doesn't. This chart only goes back to 1976, and here in 1976, 1 ounce of gold was $100, and the S&P 500 was also $100. And today, this is where you would be in the S&P 500, and this is where you would be in gold. And by the way, I put this chart together a while ago, and my outlook for gold is not pretty at all. And the only time gold was a better investment than the S&P 500 was right here between 1997 and 2003. If you bought your gold during this 5-year window, you had a better investment than the S&P 500. And maybe by the end of the year, that's not even going to be true. Okay. And this is not even counting dividend reinvestment. If you reinvest the dividend, then the S&P 500 is like at 7,000, right? Like it's a good store of wealth, but it's not an investment. It doesn't make any money.
So I just want to pause right there, and he's totally right, but you have to see the different perspectives that you're getting from Mike Maloney, and then Tone Vays. So Tone Vays is an investor, and he's 100% correct. But I'm going to show you another chart. Tone said gold is a terrible investment. Now, if you're in the market and you know when to cash out, you're doing fantastic. But as you can see right here, if you were to buy gold, you'd have been doing quite nicely. So if you cashed out right up here and moved yourself into gold, you'd have made all these gains. If you were back in the S&P 500 here and you rode it up and rode it down, rode it up, rode it down, that'd be fine. But if you were to cash out at these points and move some to gold, cash out, move some to gold, you're making substantial profits. And Tone's 100% correct. It's a preservation of wealth. It's not making you any money. So when you're an investor and you're in this realm and you're trading these things, you can do pretty good. Just hope your market timing is impeccable because you can lose big time. So I'm going to go to another chart here. Now this is gain. So again, this is courtesy of stockcharts.com. You can see right about here, if you're to invest in gold, move out of stocks before the crash. You can see how gold was up and down, and right where we're at today, if you would have just stayed in the stock market, Again, this is the S&P 500 versus gold. I would have to say this century, since the turn of the century, gold is a fantastic investment. Because if you were to look at the gains that you're making from this time period, in 2007 to now, to here. Look at the spread. So this is gain, whereas Tone's chart here is based in US dollars. And unfortunately, the US dollar is not going to be king dollar forever. When, I'm not too sure, but in dollar terms, if you're an investor, a lot of times you're trying to find gain. You want to find an undervalued asset and move into that asset from another asset before it implodes. So again, like I was saying, if you were to sell here, move to gold, sell here, move to gold, in dollar terms, Tone is right on this chart. But this is based in dollars. This is your actual gain that you're making from your investment. And gain is what you're after. Are you going to get the best bang for your buck? How much gain are you actually able to achieve? Not necessarily in US dollar terms. I'm not the greatest at explaining that, but it's very important. And getting back to this chart, I'm not too particularly sure that gold's going to head down this far, for the simple fact that you can see these inflection points where gold and the S&P cross. One is right here. One is right here. It happened again here in 2013. And to suggest that gold's going down, I don't believe that, and I'll show you why. Just because of this chart, goes back to this chart. 1971, off the gold standard, and then boom, money printing. Just constant money printing. How gold will continue to go down against the US dollar, because this chart is based in dollars, I don't believe so. I guess it could, but I don't believe it will. Going back to bubbles, these two will meet again. Where in this area on this graph, I'm not exactly sure. But when you have this much of a spread, this is where you want to cash out, move into an asset like this that is tremendously undervalued, and ride that up, and then go back into stocks, if that's what you want. So I'm going to head over to this chart. This is the US Mint coin sales, gold and silver. So you can clearly see on this chart how the trend line has been down since about 2012. And right now, like, we're way down here at the bottom. So when this is very hated, precious metals are hated, it's probably a good time to consider them, or at least look at them out of your portfolio. And I don't need to say anything more, especially with regards to cryptocurrencies. If you have both these assets, I think you'd be in a great position. So that's my take and analysis of comparing Mike Maloney and Tone Vays together and how they contrast. They're quite similar in their views. However, Tone Vays' argument that gold is a poor investment, it is a store of wealth, he does admit, but I'd have to disagree with him on that. I just can't see it. Compared to the US dollar, I can't see how gold's going to depreciate much further. I showed you the chart. The money printing is just going up, and you talk about high interest rates. I can't see how they're going to be able to raise interest rates much higher. I think it might be a head fake by the Fed to get people thinking they're going to do that, when it turns out they're going to probably move us to a cashless system. Maybe it's Ripple coin, the banker's coin. I have no idea. And they'll just take us into negative interest rates. It's quite possible. Mike Maloney, too, I wanted to play that clip on cryptocurrencies. I've followed him for several years now, and he's been an avid gold bug and a precious metals investor. And he used to claim that he was 100% invested in precious metals. So to watch that clip there today, to see that he actually has some cryptocurrencies, I would imagine it would be Bitcoin, I find quite fascinating. And a person that knows the money system, the central banks, and wealth effects as much as he does, you might want to consider adding that to your portfolio. And for those that are following Tone Vays, the reason I just wanted to compare the two is because Tone Vays gets a lot of traffic, people that are exploring and investigating cryptocurrencies. They have a lot of questions and answers, Q&As. He does these streamcasts, and they're great. He's very, very knowledgeable and very intelligent. But I just wanted to show his perspective isn't exactly incorrect from his angle because he's an options trader. So by being able to trade the options, he needs a stock market. For you, unless you're doing, or if you're in that game, that system, and you don't have a lot of money to play with, and you don't have all day to trade, gold and silver are fantastic investments, preferably silver, because the way to make money is through gains. So for me and for anybody else, look around. I showed you the chart between the S&P 500, where it's at now, the price of gold. I'm trying to get on the camera, right from Tone's chart. Tone's chart there. Do your analysis, do some homework, find a hated asset. And right now, some of the most hated assets are precious metals. And of course, there's market manipulation, but there's also some excellent work out there comparing precious metals to the price of oil. And that does correlate quite heavily as well, because again, oil is another asset. So thanks for watching. I appreciate your time. Hopefully this helps out. And for anyone that's following Tone Vays' work, and if he ends up watching this, great job. Check in with you all the time on YouTube, and take care. Bye now.